Good day, grade 11s. Welcome to my channel. Today we'll be taking a look at bank reconciliation. This is part 2 of the bank reconciliation series. So please make sure to watch part 1 because in part 1 I explain in detail what bank reconciliation really is. In this part 2 we'll be doing the second example of the bank reconciliation, and this is the second way they might assess you in bank reconciliation. In part 1 I explained another way how they assess the bank reconciliation, and also in part 3 I'm also going to explain a different way in which bank reconciliation can be assessed. So please hit that subscribe button if you haven't hit it yet, and also like and share the video if you find it useful. Without wasting any more time, let's get started on our example. So we are provided with a scenario relating to Lucky Jimmy, the cashier of Franco's Deli, is in charge of collecting, receipting, and banking all cash receipts as well as all payments done via EFT. He feels that there is no need to prepare a bank reconciliation statement because the bank keeps accurate records of all transactions as reflected on the bank statement. We are required to calculate the correct bank account balance in the general ledger on 31 July 2020, prepare a bank reconciliation statement on 31 July, and explain to Lucky why it is necessary to prepare a bank reconciliation statement each month. Provide 2 points. So in this example, we are not required to complete the cash journals, but in the first example we did in part 1, we were. So I suggest that you go back and watch part 1. That's why it's important, because it's a different way they ask bank reconciliation. So it is important that you watch part 1 so you can understand the basics that I explained, and I provided more details on what really is bank reconciliation. And also in the third part I'm going to show a different way in which bank reconciliation is assessed. So please ensure that you watch part 1, 2 up to 3 so that you fully understand. So now we are going to start by completing our bank account. This is the information that we given. Information A, favorable balance as per bank account on 31 July 2020 was 11,743 before receipt of the bank statement from Money Bank. So like I explained in the previous video, that favorable balance means that our balance brought down is on the debit side or positive. Then unfavorable balance means that our balance brought down is on the credit side or it's negative. Then balances per bank statement on 31 July 2020, we are not given it. Then we are given items that were in the bank statement but were not shown in the cash journals. That means these items were recorded by the bank but we omitted it. So we are going to fix the error in our journals or in our bank. Then information C, these are amounts that were recorded by us but not by the bank. That means the bank omitted these transactions. So we are going to record these transactions and we're going to fix this in the bank statement. That's the same also with information D. We're going to fix it in the bank statement. So the first thing we're going to do now is open our bank account. Go to your answer sheet. They usually give you an answer sheet. Now they said calculate the correct bank account balance on 31 July 2020, and we are going to use this information that we're given. So information A, they tell us that favorable bank balance as per bank account on 31 July 2020 was 11,743 before receipt of the bank statement from Money Bank. So they tell us our balance brought down. This 11,743 is our balance brought down, and it's going to be positive because they said it's a favorable balance. If they had said it was an unfavorable balance, it was going to be negative. So we record that 11,743 in our bank account. Now, balances per bank statement, 31 July 2020, question mark. This is we're going to solve the question mark when we're doing our bank reconciliation statement. Now we come to information B, items on the July bank statement but not shown in the cash journals. Usually what we do is we record these amounts in the cash journals, but since in this example they required us to calculate the correct bank account balance, and they did not tell us to calculate the correct balances in the cash journals, we are going to put all these amounts here on our bank account. So instead of opening up your CRJ, CPJ, we're going to fix this in our bank account. So anything that was supposed to go to the CRJ we're gonna add it, and then anything that was supposed to go to the CPJ, we're gonna subtract it. So we're gonna start here with service fees and cash deposit fees. We're gonna start with amounts. Let's just start with things that were supposed to go to the CRJ, our income. So let's look at interest income. That was supposed to go to the CRJ, 23 Rand. So we're gonna add that plus 23 Rand. Then let's look at commission income from Louville Pastries, 522. That was supposed to go in our CRJ, so we're gonna add it. Then direct deposit by debtor, why not? That was also supposed to go in our CRJ, so we also add it. Now let's look at items that were supposed to go in our CPJ. We're gonna look at the service fee first. That was supposed to go in our CPJ, so that needs to be subtracted. But we're not just gonna subtract the service fees alone, because like I said in the previous example, that service fees, cash deposit fees, you add them up and record them as one, because those are considered bank charges. So any bank charges will be added and recorded as one. So we're gonna add that and record it as 117. Now we come and look at this 800 Rand here. Debit order payment for insurance to XI insurer. This amount appeared twice in the statement in error. That means this transaction has to be fixed here and also be fixed in our bank statement, because in our bank reconciliation statement, because this amount appeared twice in the statement. That means the bank made an error when they were recording this amount. So since it's a debit order payment, we're going to subtract it, this 800. So we're going to say minus 800, because it's a payment, it's a debit order payment. Now we're going to, since now we're done recording all the items that were missed in the cash journals, we're going to add that up, and when you add that up, you're going to get 11,500. There, we've successfully completed the first part of this activity, which was complete the bank account balance, calculate the correct bank account balance. So now that we've done calculating the correct amount for the bank account, we are going to continue with our second part of the question, which was prepare a bank reconciliation statement. So it's actually important that you watch the first part of the bank reconciliation series, part 1, before this, because now you might be a little lost, but if you watch part 1, it's all going to make sense to you. So please try and find the video and watch it before you watch this one. So here's the information that we're given. Now we're going to fix the items that are supposed to go in our bank reconciliation statement. So the format of the bank reconciliation statement is really easy. Please take it down. So the first thing we're going to write here is balance as per bank statement. This is our bank account which is completed. So we're going to write balance as per bank reconciliation statement, balance as per BRS, which is the same one as this balance as per bank statement of on 31 July R question mark. That's the one we're supposed to calculate now. So this functions as our opening balance. We are not told. That means we need to calculate it. Then what goes down here is our balance as per bank account. There is our bank account. We've just fixed it and calculated the correct balance. That means since the balance in our bank account is positive, it has to go on the debit side. So if it was negative, it was going to come on the credit side. But in this case, it's positive. So we're going to record it here on our debit side, 11,500. The next thing we need to do is we're taking to account information C and D. These are the items that were recorded in our journals but did not appear in the bank statement. That means the bank made an error and they omitted these accounts, these transactions, when they were preparing the bank statement. So we're going to start with information D, and all the deposits, or should I say anything that was supposed to go to the CRJ, is going to go on the credit side, and any EFT or anything that was supposed to go to the CPJ is going to go on the debit side. So we're going to start with information D, the deposit on 31 July. So we're going to say credit outstanding deposit. That's what we call any deposits that were not in the bank statement. They are outstanding. And it's important that you write credit outstanding deposit, because you get marks for that. So now that we've credited our outstanding deposit, we're going to write it on the credit side, which is 3,935. And then, like I said, any EFTs that were outstanding in the bank statement, we call them outstanding EFTs, and we're going to record them in the debit side. So we're going to start by recording the first one, EFT1. So we're going to say debit outstanding EFTs, and it's important that you write a semicolon and you write the number of the EFT because you get marks, because here there is two EFTs, so it's also important that you write the EFT. So the first one is 675 Rand. We want to record it on the debit side. Then now we put another semicolon. You're not required to rewrite the whole thing. You can just put another semicolon and put a 2. Then the amount is 2010. Now that we've taken all the amounts that were outstanding in the bank statement in account and we've recorded them, we now need to fix this error. Debit order payment for insurance to XI insurers. This amount appeared twice on the statement in error. So what we are told is, the first thing we know is that this is a debit order payment. It's supposed to go to CPJ. That means it was supposed to come to our debit side as an outstanding EFT. That's what was supposed to happen. Now, this amount appeared twice in the statement in error. That means, yes, we did record it on the debit side, but now it appeared twice. So firstly, it was on the debit side. That means to fix the error, we're supposed to subtract it, and we're going to subtract it on the credit side. So we're going to call it correction of error, and we're going to say credit it, because at first it was supposed to go to the debit side, but now we recorded it twice. So we need to subtract that one that we recorded twice. We recorded twice, so we need to subtract one of them. So we're going to say credit correction of error and put the 800 on the credit side in order to subtract it. Now we've successfully completed our bank reconciliation statement. We've taken all the transactions into account. Now what we do is add up the bigger side. So you're going to look at these amounts and also look at which side is the most. So we add up. In our case, the debit side is the most. It's going to give us 14,185. You record it on both sides. Now this is similar to just closing off an account. By now, grade 11s, you should know how to close off an account. So we've taken all the calculations into mind, and the bigger side was the debit side. That means our balance carried down, or the balance is going to be on the credit side. So what you're going to do is take this 14,185 and subtract the 800 and the 3,935, and you're going to get 9,450, which is the balance for balance as per BRS, balance as per bank reconciliation statement, which was the one they put here, but with the question mark. So now you've successfully completed your bank reconciliation. You're done. So this is actually really easy, but I suggest that continue and watch part 3, because part 3 is the most difficult one, and also watch part 1 so that you understand more and you're not lost. Now, the last question we're asked is, explain to Lucky why it was necessary to prepare a bank reconciliation statement each month. Provide 2 points. So since it's out of 4 marks, like they said, we need to provide any 2 points. So the answer to that is really simple. To check the business records against the bank's records, we need to make sure what we recorded is the same as the bank. To identify outstanding EFTs and deposits, that's what we're doing in the question, where we were recording what the bank omitted and we're saying outstanding deposit, outstanding EFT. To note and address errors and omissions, we fix the errors. To note bank charges, interest and debit orders, and effective cash management or internal control mechanism. We are done with bank reconciliation. So I suggest that please go on and watch part 3 of the video. I'll try and put a link in the description to the video of part 3. So please ensure that you watch it. Thank you for watching. If you found the video helpful, please hit that subscribe button. Also like and share, and comment in the comment section if there is anything that you did not understand or there's a topic that you would want me to cover.